Hey everybody, Boris speaking at Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar, December 10th, December 14th, 2018. And the story in front of us on the COM dollar land is really a discrepancy between Aussie and the rest of the COM dollars, with CAD, ironically enough, being a very, very strong trade end of the week. We'll take a look at all the charts in just a second, but the levels have really changed the other way. Aussie now looks to be a big sale at the 73s, certainly, basically faltering at the 72s, with 71.50 now the key support for the pair. Dollar CAD tapped the 34s early this week, but came back off that high, and now I think has a reasonable chance to trade down to the 32s after a very positive employment data today. And then Kiwi just holding bid. Kiwi is sort of, I think, the least volatile, strongest trade on the books as far as non-volatility, and it actually presents, I think, an interesting cross pairing against the strongest in the weeks in that particular sector. Aussie Kiwi still looks to be a sell on the charts, and Kiwi itself just a much firmer bid because it's kind of unaffected by a lot of the events that are going on. Aussie is really vulnerable, of course, to the very, very weak GDP print, and more importantly, perhaps the rising tensions between China and the U.S. Yes, we're negotiating the tariffs. Yes, Trump continues to tweet about the fact that the trade war is coming to an end, and perhaps that will be a positive event, but not certainly next week. The negotiations are going to keep on going for quite a while. In the meantime, the confrontation in Vancouver between the Huawei CFO, which has been arrested by the Canadian authorities at the inquiry of the U.S. authorities, and who faces possibly 30 years in prison for a variety of money laundering accusations, which are really political in nature because it's against U.S. sanctions against Iran. All of this creates just, I think, a very, very tense situation. There are already several U.S. corporations that have banned their employees from traveling to China on fears that there could be a retaliation on the other end. Cisco, for example, was the latest one that did that. But all of that certainly creates just a pall for any kind of business transaction and investment. I mean, I certainly, as an American, wouldn't, if I was an American executive, wouldn't dare step foot into China at this point until the situation resolves itself. And it's truly a diplomatic situation, because this isn't a situation where a person was committing some sort of venal personal crime against other innocent human beings. It's really a question of diplomatic sanctions, for which the punishment could be very severe. So we'll see how that plays out. Should be kind of interesting. And that is a tension on the Aussie that we go into the next week to watch for. The calendar itself has nothing. Literally, there's no COM dollar data all of next week. It's all majors data, and we can pretty much skip any kind of calendar analysis and take a look basically at where the COM dollars shape up. I want to start with the Aussie because that was definitely the weakest of the pairs. It is coming in to the 72 support, which is a key support, but a slip below really takes us right over here. The former high, which is present, the present support would be the 71.50, and I think certainly we're going to be watching this 71.90 level. That was the post GDP lows that we set. If we break those front of the week, certainly we're going to, I have a feeling we're going to test them. But if we break those front of the week, that's going to really open up the way for 71.50 support, at which point that's really going to be a big tell of whether the Aussie kind of just rolls over. Remember, we talked about the idea this was a very, very nice, beautiful base. We did have the big breakout, and now the formation has completely changed. I mean, we still have higher highs here, but it's very distributive. And more importantly, if we take out the 71.50s, it completely destroys the upper trend of this move and puts us right back into the lower end of this range, perhaps to a test of 70. So really looking very carefully at the front of the week, and especially this whole battle underneath the 72s. As I said, if 71.90, the lows of the day go, we're opening up the run towards 71.50s, and then even further more sell-offs all the way down to 70.50. Dollar CAD, on the other hand, complete reversal of the move. Not, it would have been super, super bullish caddy if we closed on the lows of the day. We didn't quite close on the lows of the day. We ran back up to, through the 33s, but still, it speaks to me that this 34 peak for the time being is the operative swing high against which you short the trade. The trade itself is still very much an uptrend. It is not like the caddy is a super turn trade here, and you're definitely going to be taking a big spec on a longer term basis because basically what you see here technically is the uptrend in place. The buyers bought the dip, and the trade still remaining very constructive. But on the flip side, if you're looking to pick tops, certainly this was a reversal candle here yesterday, and this reversal candle is the one you trade against. You have more positive news. I definitely prefer using Canada against Australia, not necessarily against the dollar, just because that would be a stronger trade here going forward. But the other signal is, if you just don't want to jump into the fray, is to wait until these lows get taken out. Because if these lows get taken out, if we drop below the 20 SMA, which is around 3250, somewhere around there. Basically, if we close below 3250, that gives you much stronger confidence that indeed swing highs have been set, and you can trade against that or possibly move back down to 130. Then last but not least, here's the low volatility trade, which is the Kiwi. Holding bid, still holding above the 20 SMA. It's very, very compressed. We did peak out, obviously, at 69s, almost 70s over here. Still trying to hold bid here. It looks quite okay, but this is one of those kind of things. It's very, very hard to. There's nothing on the calendar to want to buy it. It really becomes more of a anti-dollar trade, you could make. I guess my point is, technically it looks good, and you certainly have a reasonable chance you're buying it at support. But I would really only buy it with a maximum 50-point stop. If it comes down below 67, if it comes down to like 67.80, I definitely don't want to be in this trade at this point, because that's going to turn from positive to it would turn from an uptrend to a distributive trade. Conversely, I don't know what the impetus will be to drive it up next week. I mean, except aside from the fact that it will have some anti-dollar flows. It's just a very low volatility, quiet trade, trading for a whopping 100 points this week. I don't even know. It was one of the lowest. Look at the lowest ranges week, and actually on the weeklies, looking much more negative than it is looking on the dailies, right? I mean, looking. To me, the more intelligent trade here is to short this. Now it's a very, very low volatility turn, but you basically, the 69.75s, those are the swing highs against which you trade. They're not far away. They're less than 70 points away. And if you do have any kind of distribution on this basis on the weeklies, you certainly have a chance to come down to 67.50. I guess my argument here is, if you're looking at this chart, especially on the weeklies, it looks more like a sell than a buy, and it looks like 67.50 is going to get done before 70.100 gets taken out, if I'm going to be taking my chances. So that's kind of how the COM dollars shape up. The most interesting trade next week will be the Aussie around this 72 level, because it's really going to be do or die for the pair as we enter the week. Wish you guys the best luck, the best trading. Boris, over and out.